Well, you're here to find out what's really happening in the real estate markets on the National Real Estate Cafe with Don Getling and Gino Franzi.
All right, and we're looking at this thing here, and no, it's not the Matrix, but yes, they are dots on a chart, and it's a really interesting chart and a super important chart because between what we talked about yesterday and what we're talking about today, these are the things that are going to continue to fuel real estate going forward for the next few years.
Thank you for teeing that. He does that so well. You think we've done this before. Oh, 8 years worth.
Yeah.
But that's a point we're trying to make this week. It's because we had a couple really bad quarters due to some anomalies in the market. It happens. They're called corrections. It happens in the stock market. It happens in the real estate market. And we had interest rates take a little hike because the Fed was getting a little over anxious to raise interest rates, scared the hell out of everybody. Rates went in the fives, scared the hell out of everybody. And the real estate market stopped for about 2 quarters. So now, but we said, don't worry. Jobs are good, economy is good. We don't have enough homes. The housing market will be just fine. Just hang in there. We've actually had a couple of these corrections. People just forget.
Now, what happens is when lenders don't have enough volume, yet they still have all their staff and they have everything going on, what do? They have to loosen standards. Now, easy there. We're not going stated just yet.
That's these.
Yeah. Stated is almost at 900.
Well, explain the chart because they're like, oh, it's a chart.
So what it measures is mortgage credit availability, right? So it's kind of a general standard. It's not product by product, but just in general, how easy is it to get a loan? Well, we know that right after the crash, it became nearly impossible to get a loan. Well, that's right here. And now
that means that it was 88.1 opportunity here and here. That means it was in the 70s.
Oh yeah, no, it was nearly impossible to get a loan. You remember you had to document every single deposit. You had to give your firstborn child.
06 and 07?
Then probably some people that were not even living got loans when that
868 on the Richter scale.
Yeah.
Versus 88.
Yeah, just completely different. And so I would call this a moderate number. 186 is a moderate number. My expectation is that we probably moderate somewhere between 200 and 400, and that creates a nice normal credit market where there's private product instead of just government lending available.
Right.
Remember, during this era here, this is Fannie Mae, Freddie Mac, VA, and FHA, and that's it.
Right.
Nothing else. And so what this is representing is the private mortgage starting to come to the market again. Private product. And here, private product actually came to the market, but at a rate that was absolutely absurd, and so nobody was taking it. Now that rates on private product have come down and are pretty close to in line with government rates, you're starting to see the shift from government lending to private lending, and that's going to give you more.
Why don't we show this up close a little bit? We can show you a little bit better. You can see, like I said, all the way to the left, you're talking about very overly loose standards by the mortgage industry. And then it went all the way down. But the good news is if you look at the number in the middle there, basically in 2013, we were at 88 on the Richter scale. And now it's at 186. That means our availability for credit for mortgages has doubled. Yeah. That's right, doubled since 2013. That's great news. That's given all of us more opportunity. We deserve more opportunity. It was too tight for a while there. Now there's more opportunity. We're coming up with now bank statement programs to help self-employed borrowers.
That's right.
More investors get
lower
involved.
Down payment requirements on some of the jumbo loans. Don't worry, you still have to qualify. You still have to have reserves. Things are still reasonable, but at least they're reasonable because they were unreasonable to the other side. The pendulum went too far in one direction. It's coming back towards the middle. Let's hope it doesn't go too far this way again.
All right, more good news from the National Real Estate Cafe. You can get these sent right to your phone by texting NREC to the number 58885.
Or as usual, check us out at donandgino.com.